Another case, that second point there, he had fled from the US where there were cases against him, and he was in Canada. And because of that, one bank was virtually had collapsed, but not officially. And the bank's directors were so furious that they had fallen for Ponzi's schemes. They engaged a private detective agency called Pinkerton. Pinkerton was, those of you who read the old detective stories, you will come across Pinkerton, very reputed detective agency. They said, under any circumstances, bring this fellow, we want to lay our hands on him. And Pinkertons delivered the goods. They found the guy. Now these people managed to alert the Canadian authorities and have him arrested for a crime in the United States. There were enough agreements between the governments. And the directors, at least 2 or 3 of the directors, went there, identified him. The man was in handcuffs, and with a couple of police or the detective people, he was being brought from the from Canada to the United States by train. As the train was nearing the Canadian border, both the detectives as well as the bank directors were really furious because they were finding Ponzi to be very cheerful and in very good spirits, very high spirits. Finally, they could not contain their surprise any longer. So they asked him, what is this that's making you so happy? You are going back for trial, prosecution, jail. He's saying, that may be what you think. But when we reach the United States, I know that the press is waiting for us. I'm going to tell the press how so-called intelligent bankers fell for this kind of a scheme. How your bank is totally gone. Then I'm happy because I'm thinking, what's going to then happen to you? These fellows were so shocked. They gave orders to the detectives to remove his handcuffs and release him. So a colorful personality, I can say. He was deported to Italy in 1934 because he was still an Italian citizen. In Italy, he found employment with a new airline. Then he moved to South America, Brazil, Rio de Janeiro. He was a branch manager of some airline there. Ponzi discovered that several airline officials were using the carrier to smuggle currency, and Ponzi wanted a cut. When he was refused, he tipped off the government. The Second World War brought about the airline's failure, and Ponzi found himself unemployed. After holding a number of petty jobs, Ponzi died in January 1949 in the charity ward of a Rio de Janeiro hospital. At the time of his death, Ponzi had $75, which was just enough to pay for his funeral. So, the pyramid schemes were nothing new when Ponzi discovered postal reply coupons. They had always existed. However, his scam was indeed one of the great shows in the history of fraud. Therefore, from that time on, the old game of robbing Peter to pay Paul would also be known as a Ponzi scheme. So the whole Ponzi scheme is thanks to this man. We have SEBI, Securities and Exchange Board of India. In the United States, you have the SEC, Securities Exchange Commission. On the website of the Securities Exchange Commission, you have this particular saying: the best way to protect against investment fraud is to ask tough questions about the opportunity and the people promoting it before you invest. There is one incident that I can never forget where I was involved. I was a student of maybe the final year BCom back in 1983-84. Out of some good fortune, I had started reading about personal investment, reading the really good books from the age of 16. So at least 4 years of experience in reading all of these, reading Burton Malkiel, not understanding most of it, but knowing there's something in it of value. In 1984, there was a frenzy in Mangalore. There was a private finance company called Swarna Investment and Finance, if I'm not mistaken. Suvarna Investment and Finance, correct. Now this was supposed to be a company from North India, most probably Gujarat. And it was supposed to be the finance arm of a very big diamond dealer or diamond merchant. It was supposed to be, I said. It was not even a company. It was more maybe a partnership firm, because the word limited or private limited was not there. And they were offering those days, of course, let me also be fair, the bank deposits were giving you 10, 11, 12% those days. And these people were giving you 18, 20, 22% for 1 year, 2 year, 3 years deposits, plus some gold coin when you invest more than so much, all those kind of things. Income tax rates those days were 45, 50% marginal for the people who were paying. When we started business, I remember our first tax rates were about 45% beyond a certain point. So inflation was high, and people needed greater income. And somehow this firm, entity, whatever you want to call it, managed to convince people that we have been around for 90 years. That 90 years was always there on their literature, on all those things. Very safe, very good, not like other companies. Somehow I could not reconcile that to what was in Burton Malkiel. And what happened thereafter was certain close relations I knew, some neighbors, some other acquaintances had also put in substantial chunks of money into that firm. From time to time I was asked, how is this? My answer was, it is not safe according to the little knowledge I have. After all, I am only a second or final year BCom student, what do I know? But I said, my advice is not to go anywhere there. The shocking thing was, a few of my own relations and others actually listened to me. And these are people who already had invested a lot. What they did was, as the deposits matured, they did not renew them. They asked for the money back. And the money was coming back. And it was quite embarrassing for me that, see, we asked for the deposits, they paid the deposits. And from 18%, we are now earning 11% in the bank. Okay, so it was embarrassing. It was embarrassing. It's as if I have taken money from a very good profitable opportunity and advised them to put it here. A few of them did listen, a lot of them did not listen. Then what happened was, my own parents were approached with a leaflet saying there's going to be an investors meet at Moti Mahal, which was the hotel those days. This was nothing to do with Suvarna, but Suvarna's parent company, something called Surajmal Diamonds, if I'm not mistaken, is going to come out with a public issue. This is a company. Now, when they say company, public issue, at least I'm on a little more familiar ground, because even at that time I knew a reasonable amount about public issues, the stock market, etc. So, my dad asked the branch manager here of that entity, can my son also come for this meet? So, he made the mistake of saying yes. I was there, I was 20 years old, and a lot of people, maybe 70, 80 people. And there was a guy in a suit, one of the directors of the company, and he started talking. The month was July or something like that, and he said how we are coming out with this public issue, and the shares will be listed by October, and in October we have Deepavali, and you know how in the Deepavali the markets always go up. So he was keeping on talking like this, so I could not control myself any longer. I stood up and started asking questions. He said, since you say the markets always go up in Deepavali, during Deepavali, I know it is not so. It is when the markets go up during Deepavali, it makes the news. When they go down, it does not make the news. So what remains in people's mind is that the markets go up in... I said, what empirical study have you done? Have you taken 10 years data at least? How many Deepavali times the markets went up? How many times did they go down? Okay, I started asking questions. And he started fumbling. Then I started asking deeper questions about this. I said, in all your literature you say 90-year-old, 90-year-old, 90-year-old. Where are your audited balance sheets? Here I see it's a new company coming out with money for the first time, an IPO. It's a simple IPO. All this baggage that you have, historical baggage, where can I find authentic proof of audited balance sheets, of actual facts and figures which we can sell? He started getting angry. He's saying in your own town, there are so many hundreds of depositors who have reposed their faith in us. I said, all that is okay. But I have to have read foreign books, which are very, very good. They make a simple point. There are two categories of people. One category has the money. They are called the investors. The other category wants the money. They are the institutions or issuers who want the money, who are going to issue securities against this money. The people who want the money cannot dictate terms to the people who have the money. Okay, let's understand that. It is the people who have the money who are in a position to dictate the terms. This is one thing you should never forget. It has stood me in very good stead along. I'll give you some more examples maybe after the break. But as I started asking questions, he started getting wild. Now, I was already in our college debate team in those days, much better then than I am now. So when he started getting wild, I started getting sarcastic. And after a time, he almost lost his temper. Suddenly, to my delight, the people, they started saying, no, answer the question. They started coming out in support. They said, no, he's asking a valid question, answer that question. In short, their so-called investors conference in Mangalore ended in utter disaster, total chaos. And in fact, people were crowding around me at that time, asking me for advice about, what to do with our existing deposits in the old Swarna thing, etc. I said, see, the same advice that I've given for the last 2 years, I'm giving you. Okay, up to you to take it or not. About a year after that, the whole thing collapsed. The whole thing collapsed. Until probably for a period of about 3 years, I was quite embarrassed because I used to sometimes meet someone on the street. You told us to take it out. We also felt a little scared. We took it out. But our 18% has now become 11% in Syndicate Bank or Vijaya Bank or Corporation Bank. I said, okay, I am sorry for that. But I think the safety of capital also is important. So my advice will not change. And the whole thing collapsed. And it collapsed in such a manner that the employees themselves did not know this. They just turn up one day for work. They have opened, somebody has the key, they open the shutters. People start coming there, we have heard this rumor. The employees have not heard it. It's the other people who have heard it because some relation from some outstation place has rung up and said, the shutters are not being taken out here. There's some problem. How is it in your place? And then these people had to face the flak, face angry depositors. They are actually innocent, just wage earners. So the whole thing collapsed. And my period of embarrassment, of course, ended. After that, I was getting a few pats on the back. Now, you wonders, you did say, and some of the, you wonders, but we still kept our money there. People got nothing back. Nothing, not even 1 rupee. The whole thing was a mess. There was an investors association formed. This police case, that criminal case. Yes, all cases. You'll win the cases, not get the money back. What's the use? So, we come back to this. And it's worth reading this again. The best way to protect against investment fraud is to ask tough questions about the opportunity and the people promoting it before you invest. One more embarrassing thing was, as I was cross-examining this guy, actually my parents were saying, no, don't do it in such a rude manner. they were trying to calm me down. I said, no, there's a way to take these people. Okay, you should meet fire with fire. If he can, be angry about somebody asking valid questions. I'm not asking stupid questions. I'm asking valid questions, and I'm asking questions from their own literature provided. I'm not making fancy allegations. So I refused to do it. It was embarrassing, but it was heartening at the support I got after the cross-examination. Actually, 2 or 3 of those persons asked the director, how come you can't answer these questions posed by a 20-year-old? This was the actual question I still remember asked by one of them. He's asking, answer, we want an answer. We want an answer. Let's ask the same questions that we were asking when we took this break. Who has the money? Who wants the money? Who dictates the terms? Someone I know in the last 2 or 3 weeks had come to me. The question he was asking was a bit confused. I understood it this way. He is working for a software company, a technology company. And what I understood was, or at least maybe that's what he briefed me in the first instance. His company is asking him to invest 5 lakh rupees in its own shares. Call it an ESOP, call it just an investment opportunity, call it whatever you want. One of the worst things that you can do is invest substantially into shares of your own company. In 2000 or 2001, Enron Limited was among the world's top 10 companies, the world's top 10 companies, not Indian, not US, the world's top 10 companies. And if I'm not mistaken, a lady working for Enron, who was nothing more than a stenographer, so a very humble position in the company, not an executive manager, no, appeared on national TV declaring how her retirement benefit fund was worth 2.5 million US dollars. A humble stenographer, retirement fund $2.5 million, all thanks to this great company she's working for, Enron. And how did that retirement fund, on the salary of a stenographer, reach $2.5 million? Very simple. The company had a scheme by which whatever money they deduct from your salary for retirement would go only into Enron shares. So she's an Enron employee, and here is her retirement fund, and the retirement fund is fully in Enron shares. And Enron being recognized, of course, as one of the world's top 10 companies, share price is high, $2.5 million in my retirement kitty. And when somebody had the guts to question her, is that a wise thing to do? She says, what do you mean? We are working for the company, we know exactly what this company is. A year later, the value of Enron shares was zero. Fraud was discovered, everything else was discovered. On the one hand, there is no job, you lost your job, company is gone, no income. On the other hand, your $2.5 million has made the journey all the way down to zero. No job, no money. Had she invested the retirement fund in a well-diversified portfolio, it would have taken a hard beating in the aftermath of the technology bubble bursting, no doubt about that. But there would be a retirement fund. There would be a retirement fund. And built over many years, there may not have even been losses. Your returns would have been lower. So, it is not wise to invest in shares of your own company. So, the moment this man told me, I've been asked to invest 5 lakhs, I told him, I sympathize with you on one account. That is, it is embarrassing to say no to your own employer. But the fact remains that when somebody is asking you to invest, it is investment considerations that have to be seen ruthlessly. And here it is, you may be an employee, but in this transaction, you're the person with the money, the company wants the money. I need information about the company before I tell you to invest. Second piece of advice I can give you right now, don't invest 5 lakhs. Think of a figure like 50,000. So you tell the company, I'm going to invest, but for some, I cannot manage 5 lakhs. Okay, outer limit 1 lakh, because I knew the kind of salary he is earning. I knew, okay, 1 lakh of rupees, maybe a month's salary is fine. Invest that much. Don't invest 5 lakhs. Now, even if they want you to invest more, the first thing is we need, because it's not a listed company, there is no publicly available information. So immediately he got back to me the next day and said, the people there are telling me, why does your consultant want all this information? Tell him to call us. We'll answer all the questions. I said, hang on. Who are they to tell me to call them? Do I need the money? Do you need the money? You have the money, they need the money. They need, they call. I don't call. Okay, they need, they call. So let's not mix up issues here. Then it so happened that this man actually came to Mangalore to help someone else here. And in that context, he met me. Then he tells me one truly shocking thing. It is not the company he's working for. It's his previous company. He is now switched jobs. He has got to a new company. The previous company is calling him and asking him to invest 5 lakhs in their own shares. I said, here there isn't even the embarrassment of your having to say no to your employer, because that company is now not your employer. Okay, now it's pure investment. Under no circumstances are you going to invest there. If you do so, against my advice, if something bad happens, don't come back to me. It's your funeral, totally. So I said, what is the audacity? I told them, if you be happy that that chap didn't ring me up. He would have got a earful the moment I realized that you're not an employee there. Okay, this is a ridiculous thing we see in life. Somebody has the money, somebody wants the money, but the person who wants the money or the entity that wants the money is dictating the terms. No, it doesn't happen. And we are guilty. We are guilty for this situation because we are like lamb to the slaughter. We don't ask questions. We don't ask questions. If I were able, if science had advanced to that extent, I would have actually liked to open people's minds, put this sentence there and seal it. Okay, so it's worth reading this again before we proceed. The best way to protect against investment fraud is to ask tough questions about the opportunity and the people promoting it before you invest. Those last 3 very important words. I have done this throughout my life. Let me tell you, there has not been one occasion where I regretted it. Not one occasion where I thought, okay, I should not have asked those tough questions. Probably there are several instances where the only regret was I should have asked tougher questions. The old American saying, there's a sucker born every minute. You always wonder. Take these 2 districts, the old undivided district of South Canara, now Dakshin Kannada and Udupi, supposed to be a place of very intelligent people. I have my doubts. The highest number of private finance companies are here. The highest number of private companies. Ages ago, when I held an administrative post in the then Mangalore Stock Exchange, we used to organize a few investor conferences in the outlying towns. I still remember addressing one investor conference in Puttur, about 55 kilometers from here. It was a Sunday morning, so we had finished all that. And then I was just to get a feel of the place, there at least used to be one main road. So I was just decided to take a 10-minute walk up and down. And of course, most of the shutters were down because it was a Sunday. But I'm only seeing boards of finance companies. Okay, I was shocked. The number of finance companies that there are on that one street. Nothing else struck me. So when I sounded somebody out, he said yes, because a lot of agriculturist money in all these finance companies. I said, but don't they go? Yeah, they go back. They go bad. People don't learn. There's a sucker born every minute. They don't learn. Somehow I think this particular finance company in which I have invested my money, nothing will happen. It may happen to all other people. Nothing bad is going to happen to me. Let's examine a few places where you should not invest. Pyramid schemes. A scheme which circulates money. The lucky few get in at the top. Money comes back to them. Very often, when we say lucky few, these people actually may not be lucky because they get so greedy, they then reinvest, continue reinvesting. And by doing that, they push themselves to the bottom of the pyramid. And at the bottom, the base, when does the pyramid collapse? when the base is at its widest, when everybody has got a frenzy to put money, that's when the whole thing will collapse. Money that comes in is used to pay off people who want to get out, who had invested earlier. And everybody talks about the great returns they get. It has got so many different forms, from a simple lottery-like thing where you fill up some forms, and this has been there for ages. I remember when I was in the 10th standard, there were some of my classmates who were into this kind of a thing. And they actually said that they had made money. So we have got this. Private finance companies. They can be firms. I've just loosely clubbed them into companies. They may not be actual companies at all. Not joint stock companies at least. But any firms. It can be partnership firms, private companies, any of these who pay you a huge amount of interest. Nobody pauses to ask why they have to pay a much higher interest. Otherwise, they will not be able to attract money. But isn't there a risk element involved there? Nobody pauses to think. Installment purchase schemes at outrageously discounted prices. This is a surefire method. It's been around for ever since I was probably in high school. At least that's when I have heard of it. It's probably there for centuries before that. A refrigerator, let's say, costing 40,000 rupees, somebody gets for 15,000 rupees. And the thing actually comes home and it's installed and it's working. News spreads. We can get things cheap. More and more people join in. More and more people. The money that's coming in is used to actually give some goods to these people. They save a lot of money in advertising. They don't need to advertise at all because the best publicity is word of mouth. So these initial people, members of the scheme, who actually got goods at heavy. I've actually seen people operating here. There'll be one or two so-called big businessmen who have been in existence for a long time, maybe several decades. They pay a certain interest. Let's say they pay 15%. There are some smart people who start collecting money from their relations, friends, neighbors, acquaintances. Pay those people 10%. Invest that money with this big businessman at 15%. And 5% is the profit. I've seen so many of these kind of things going on. One day, the big businessman collapses. Suddenly the depositors know it was because of you. We gave you. What you did, we don't know. The fact remains that you are not able to repay us. These are all things to be guarded against, to be avoided. Let's examine cooperative banks, a very interesting entity to analyze. I myself in my career have had the occasion to give some advice to some of the people in these things. Do not confuse cooperative banks with the cooperative movement. The two are different things. I'm a great fan of cooperative societies, cooperative movements, if those societies mean a coming together of people with common interests to pursue objectives which are of benefit to everybody. A cooperative society like the Gujarat Milk Marketing Federation, Amul products. I mean, we should be proud of such a thing. They gave a better deal to the dairy farmers, to the other people, and their brand today can compete with any multinational brand in India. From their slick advertising to the actual products, to their pricing, to the fact that they have helped the end users, it's a classic desirable case of cooperation. I am talking about cooperative banks, which are cooperative societies carrying on banking operations. The dynamics here, I'm afraid, are totally different from genuine cooperative societies. Let's look at that. The first difficulty that cooperative banks have is that they have to serve two masters. The first is the Reserve Bank of India, The second is the Registrar of Cooperative Societies, which is a state body. The Reserve Bank of India, I'm afraid, does not really regulate cooperative societies too much. Why? Because there are so many hundreds of thousands of them. For them it is secondary. They are bothered about the banking system and the banks, and believe me, the RBI is doing a terrific job. I'm not saying everything they do is correct, but pretty good. Cooperative banks are loosely regulated. The Registrar of Cooperative Society is nothing but a state government functionary and comes with all the kind of bureaucratic baggage you will have or you can expect from state government bureaucracy. The moment we use the word bank in the name, suddenly people have a certain opinion of banks. Of course, of late the banks are doing their best to damage and destroy that reputation. But in the old days, at least, they did have a respect the moment the name bank is mentioned. So the word bank is mentioned, deposits start flowing in. There are promoters of cooperative societies, politicians on the board of directors. Very often, people in the cooperative societies, cooperative banks, are highly undesirable characters. They are not bankers at all. In fact, they would not know banking basics. They are people who know how to get elected to the boards of the banks. You have to manage money. In the managing of this money, there have been a lot of scams. The Ketan Parekh scam. Money was siphoned off from a large number of cooperative banks. So many banks collapsed because of Ketan Parekh. The second point there is my main argument against having deposits in cooperative banks. Let's understand the second point. The board of directors is likely to be controlled more by borrowers than depositors. You need a loan. I look around, okay, nobody, finally somebody else, that cooperative bank may give you. I go to the cooperative bank. The manager looks at me quite sternly. Okay, fill up this application, give me these papers, do this, do that. At the end of it, okay, he says, listen, we have got a condition here. You want a loan of 2 lakh rupees. Our condition is that 2% of the 2 lakh rupees, you have to buy shares in our cooperative society. So you beg, plead. I tell him, see, if I had money to buy your shares, I would not come to you for a loan. But you are forcing me to buy. So no, I am giving you 2 lakhs, 4,000 rupees, you have to buy shares of the bank. So whether or not you want it, you pay 4,000 rupees, you get shares of the bank, you now become a shareholder of the bank. Contrast this with, you are now a depositor. You walk into the same cabin, meet the same manager. You say, I've got 2 lakhs that I want to put as a fixed deposit here because I understand you are giving 1% more than nationalized banks. So the manager says, okay, but I have one request. You have to also buy a few shares of our bank. You tell him, what do you mean? Who are you to tell me to buy shares or not? You tell me whether you are taking my deposit or not. If you have got a condition that I have to buy shares, I don't want shares of your bank, I'll walk out, I'll see somewhere else. Immediately, no, condition waived, please put your deposit. In one case, you are dictated to, in the other case, you can dictate. You have the money. But ultimately, what happens to the shareholding of the bank? You will see that the vast majority of shareholders are, who are they? Borrowers or depositors? Borrowers. Absolutely. Absolutely. And who are electing the directors of the bank? The shareholders. And the shareholders are mainly the borrowers. Are they likely to elect candidates who are more kindly disposed to the borrowers or the depositors? Obviously, The candidates that they elect are going to look after the interests of borrowers. If you are an investor, you are a depositor. Just on this one fact alone, your risk levels increase. In the state of Gujarat, supposedly one of India's most advanced states, maybe in a number of other ways, a gigantic number, tens of thousands of cooperative banks have failed. They have failed everywhere, but Gujarat was a massive, massive scam. Massive scam. Okay, so just understand this one simple analysis nobody does. That the board of directors, I am a depositor, who is looking after my interest? The board of directors are the ultimate authority. They are elected by the borrowers. They are going to look after their interests, which means they may give loans to undesirable people, which means there may be higher NPAs, which means my money as a depositor is threatened. This is not seen. Last point is absolutely true. It is not that all cooperative banks are bad. There are some excellent banks which have been around for decades. They do correct banking operations. But the general rule is, do you have to go to the cooperative bank? Are you telling me there are no other banks around to do banking operations? Be careful. Be careful where you choose, where you go. Have a clear understanding why you go there. Just one example. This was a scam that took place in Nagpur in 2007. The Samta Sahakari Bank. Quickly you can read it. Top brass indulged in serious irregularities. Unsecured loans were sanctioned to clients of dubious entities. I told you, board of directors are more in favor of the borrowers. Furthermore, directors and top officers of the bank took huge loans themselves, which they never repaid. All the top officials of the bank, including its chairman and 21 directors, were booked for defrauding the bank to the tune of 145 crores. The scam was exposed after a flying squad from the cooperative department audited the bank's accounts and found terrible irregularities. The squad will fly, the depositors will die. Shockingly, some of the bank's directors were also the key accused in the Nagpur Mahila Sahakari Bank scam case, which was unearthed in 2005. So become directors of one bank, scam, go from there, start the next bank. This is a game that we have seen repeatedly in cooperative banking history. Non-banking finance companies, NBFCs. One more area to be very, very careful. Lot of them have failed. You see, they collect a lot of money. They are going to pay you a certain return. They also have to make money. What happens to NBFCs very often is, they look around and see which is the sector of the economy that is flourishing. They pour money there or they lend money to that sector. And history repeats itself. NBFCs never learn. They never learn. In India, they regularly get caught in the real estate sector. We have seen it happen so many times. Real estate markets are booming. The NBFCs will be collecting money, giving to builders. Real estate boom ends, you have a recession like you have now. The money of these chaps is stuck in projects. They have to pay interest. And there will be some depositors who want their money back. In order to get that money back, they have to dispose of real estate. They can't. Nobody wants to buy an incomplete project. Or there are no buyers, period. You have a crisis of liquidity. There's no liquidity. Suddenly, the NBFC cannot pay. NBFC collapses. And here you see some names. These were all some of India's largest NBFCs in the late 1990s and the early 2000s. Some of them were promoted by well-known groups who just abandoned these companies saying that that's a separate company. For example, take a company called Alpic Finance. Okay, 10 rupee share of this company was 760 to 770 rupees on the Bombay Stock Exchange in the last years of the last century. It went bankrupt. You think Alpic is some ordinary company? You know who promoted Alpic? Read the name backwards. Exactly. Exactly. Cipla said no, it's a different company. It's a different company. So just because there are some big names, and Cipla is a big name in the pharma industry, no doubt about that, doesn't mean you can trust your money to its NBFC arm, to its finance arm. When you come to the stock markets and the commodity markets, I don't have to really tell you this, people who have been with me in these simplest talks, you know the importance of a long-term investment strategy, especially in real estate and the equity markets. Stockbrokers who make you indulge in day trading, trade within the day, buy, sell within the day. Can you ever think of making money on a sustained basis versus margin trading? You are allowed by law to trade on the margins. What does it mean? If you have got 1 lakh, the broker says, I can lend you another 1 lakh. Instead of trading only for 1 lakh, you can trade for 2 lakhs. So you keep your 1 lakh as a margin, you get an additional 1 lakh, and for 2 lakhs you can trade. Now, is the broker giving you 1 lakh of margin free of cost? No. On that 1 lakh, you are going to be charged. You are going to be charged. Margin works beautifully for the brokers. What do the brokers do? I'm giving you a very simple example. So this is the client's money. Now the broker will match what you have. And the broker will have a NBFC, non-banking finance company. A lot of money will be in this NBFC, and the NBFC lends 1 lakh to the client. Now tell me, what are the benefits to the broker? Sorry? Absolutely. There are 2 benefits. On the money lent to you, interest is charged. This is benefit number 1. Second, you were a prime bakra doing day trading with 1 lakh rupees. Now you are getting even a bigger bakra by giving him more brokerage because you are trading on 2 lakhs. So for the broker, higher brokerage and NBFC interest, which is much higher than say bank or other interest. Okay, it's what we call a broker's paradise. Okay, and this is allowed. SEBI allows margin trading. They, I think, only said that what you can borrow is an amount equal to the client, what the client has, not more than that. They would be happy to give you even more. For your 1 lakh, they would be happy to give you 2 or 3 or 4 lakhs. Derivatives, what Warren Buffett calls financial weapons of mass destruction. How you can lose in derivatives, I've already given it, but a quick example just to demonstrate to you how leverage can really affect you. If you have got 1 lakh of rupees and you wanted to trade in one stock, only one stock, so you buy 1 lakh rupees worth of that stock, the stock goes into your demat account. What is the worst thing that can happen to you? This company can go bankrupt. And you do not sell the shares at all. You hold on, hoping against hope that the company will revive. But it does not happen. This goes to 0. So the worst thing that can happen to you is you can lose 100% of your money. But now the broker says, since you love this company so much, why do you want to put only 1 lakh into this company? Why can't you put more? And you say, 1 lakh is the only money that I have. Broker says, I have found financial nirvana for you. this 1 lakh, now make it a margin and leverage this into 5. I'll allow you to trade to the extent of 5 lakh rupees, and you buy a futures contract of this company. Now, nothing so drastic as this happens. Company does not go bankrupt at all. But let's say there's a serious recession and this company falls by 30%. Its stock price falls by 30%. 30% of 5 lakhs is 1,50,000. Here, for you to lose all your money, the company had to go bankrupt and its stock price had to go to zero. Here, in the futures contract, a 30% fall is enough for you to lose more than your principal. More than your principal. So when you leverage, please note that you can lose more than your principal. You will hear from time to time of people committing suicide because of stock market speculation. They are not committing suicide because of this. Believe me. They are committing suicide because of derivatives. Many times when you have lost everything, but you are of a reasonable age and you have got some skills, you can make a life again. It is when all my money is gone and having lost everything, I am still owing people money. That is when we have things like criminal cases, people absconding, people running away, people committing suicide. We have seen enough cases like this. Commodities. Commodities are not investments. When you put all these things together, day trading, margin trading, derivatives, commodities, you have India's legally allowed casinos. See, if a casino has only one game, when you enter the casino, it has only one game, that casino is going to fold up very quickly. One game is boring. After a time, people lose interest. A genuine casino must have a number of different games. You play one game, here's the next game, that looks. As you are playing there, you can hear a lot of shouting at the third table. You wonder what's happening there. You finish your game, you go there, somebody has won a jackpot and this is something altogether new. Okay, let me try my hand at it. So, unlimited entertainment. Unlimited entertainment in a casino. Therefore, when you enter a broker's office, if you only find National Stock Exchange cash terminal, we are only buying for delivery, you can't think of something more boring. So you have got BSE cash, NSE cash, BSE futures, NSE futures, BSE options, NSE options. If that is not enough, you have got commodities. Any number of, you can from pepper to crude oil to whatever you want, you can trade. If you are not satisfied with that, there are currencies. And if you want to trade more, there's margin funding. So you can try your hand at a lot of the slot machines. And that is why when people like us contemptuously refer to many stockbroking offices as casinos, we know exactly what we are saying. They are casinos. And I'm saying this publicly on a recorded forum. They are nothing but casinos. They are there to make you trade and trade and trade, and at the end of the day, what happens in casinos? Is it the poor punters there who win, or ultimately the casino owner who wins on a sustained basis? No prizes for guessing that. The system is loaded against you. Of course, there are one or two people who will make money. If in the casino there was no shouting and there was nothing happening, lights flashing and coins being showered on somebody once and away, nobody would be interested. The fact that somebody there made money, I think in what way is that chap better than I am? I should make more. I'm a better person than he is. How come I'm not winning? Okay, let me go and put some money there. This is what's going on.